Hello, everyone. Joshua Hayes at BigWaveTrading.com. And following this past week, nothing has really changed. There is not a whole lot of new information to give everybody. But what I want to make mention is that on Thursday, I saw everybody going from the markets crashing, going to SPY 200 to all of a sudden the bottom was in on Thursday. If you look back here, we had a strong reversal day here on even stronger volume. We had a strong reversal day here on very strong volume. And both of these rally attempts quickly, after just a little run, fizzled out. Guys, with our moving average, and even back here, the moving average setup was much better back here. If there was ever a chance for anything to get good, you needed to reclaim that 50 here with the moving averages stacked the current way. They started to get a little bit weaker here, but we got back above the 50, but there was no follow through to that high print. And now we have a complete, just the moving average stack is so bad that even if you think Thursday is a bottom, we are going to have to build out a low. We are beyond the point where we can look for a V bounce back to new highs. And I'm sorry, guys, without QE, I don't know how it's possible. When I thought that they were pivoting here because we can't trust anything the Fed does ever since the end of 2018, when they did the 180 reversal from QT to QE, and last year when they were talking about transitory inflation, which, by the way, in no developed country ever in the history of mankind has there ever been transitory inflation. I gave them the benefit of the doubt the first time they mentioned it last year, but as soon as they talked about it after another increasing CPI data, I called BS immediately and let everybody know at Big Wave Trading, these guys are a joke. And then I told everybody, I'm going to start selling off my long-term portfolios if it looks like that we're going to start hiking rates. I started to do that in 2021, and before 2022 began, I was out of 50% of the long-term portfolios. Now on the way down, as soon as the SPY touched 400, added a little bit there, like about 20-25%. When we got to SPY 380, another 25% of the cash on hand went there. And then what was my next level of operation? SPY 350 in the long-term portfolios, the ones with 5 to 20-year time horizons, in big, quality, mega cap leading companies, preferably if they have a dividend, that's even better, that I know rule the world. Guys, it's not hard to figure out. Have you seen a Ford pickup truck out there? Okay, have you seen an Apple computer out there? NVIDIA microchips are in everything. Augmented reality, virtual reality, AI, the future, electric vehicles, robotics. Like, okay, speaking of EV, Tesla. You start getting these names. Guys, if you are fully invested in your 401k, I don't know how to advise you moving forward. In my opinion, we're beyond the point of no return for selling in long-term portfolios. I mean, if I still think we could, like I said, I ultimately think that we're going to get to SPY 340. That's where I think we might bottom. However, I used to work with another trader back at realmoney.com back in 2007 and 2008. I've always admired this technician's analysis, and he believes we're going to stop at 300. And if I can get things to line up, what you'll see here is 300 was the prior peak before that last tightrope move higher into COVID. Remember, tightrope move higher when you're not at new highs is one thing, but when you're hitting new highs, it's another. He thinks we need to erase all of that move plus all the post-COVID move, and that would put us right back at SPY 300. So it's possible. But in the long-term portfolio, I'm not deviating, guys. On the way down, before this stupid bounce happened when we all thought the Fed might pivot, even though we didn't have really new leaders, cancel some quality stocks. We had some, SWAV, LNTH, CELH, FSLR, ENPH, but still not a whole lot overall. So we weren't getting new leaders really showing up here. And like I said, this rally to the 100 SMA made sense, but this 100 SMA to the 200 SMA rally, this really was like, oh my God, if we go to new highs, I'm screwed because I'm not going to chase this move higher in my long-term portfolios without a Fed pivot, without QE. I'm not going to do it. Discipline ruled, guys, because we've given it all back and then some. Never chasing long-term portfolios. I piecemealed into some stocks that would gap down following a bad earnings report. Like I said, I got 5 to 20-year time horizons, so I piecemealed into those. But on the way down, nothing has changed. I need a SPY close below 350, not an intraday move below 350 like we got on Thursday. We get a move below 350, 50% of the remaining cash on hand is going into those long-term leaders. If we then get SPY 320, I'm adding a little bit more, like 20% of the cash on hand. Get down to SPY 300, I'm buying a little bit more. SPY 280, I'm buying a little bit more. And then I wait. And if we happen to crash and get SPY 250, I'm all in. And if SPY goes to 200, I'm totally fine with it in this long-term portfolio with my 5 to 20-year time horizon. And then as I collect the dividends and as I make money in my short-term trading, I day trade, intraday. I focus on small caps, but I also like big caps showing relative strength when the market's super volatile like it is. But hey, I still make bad decisions. I made money on Netflix on Thursday and Friday intraday, but then I decided to take a large intraday position in UNH based on the relative strength. I even got it right near support, chased it a little bit, took initial profits on a quarter of the position, but before then I could move my stop to break even, which is currently the way that I like to operate in this market right now once I take profits. Before I could even get it to break even, the damn stock is so illiquid and I'm so stupid I didn't even check to see what the average minute volume was on it. Couldn't get that break even stop out, so I had to use the logical, rational stop out on UNH, and I stopped out of UNH for a small loss. But that small loss, because of the position size, was bigger than the gains in Netflix on Thursday and Friday. So in aggregate, in the 2 days, my silly butt lost money. I'm okay with that. The losses were very, very, very small. I know that when things go well, I make a lot of money. And on that end, the vast majority of my day trading accounts are at all-time highs. The educational Thinkorswim account that I post on social media is at all-time highs following Friday's session. I take the money I make in that account, I move it to the long-term accounts, and if SPY does happen to get to 200, if I got cash on hand, I'll buy more. Now, that's the long-term stuff. Nothing changes on that note unless QE starts again, the Fed starts buying assets on their balance sheet, but more importantly, that Fed pivot. The moment they stop hiking rates and start stop hiking rates isn't going to be enough for me. The moment they start cutting rates, if I'm not 100% all in my long-term portfolios by then, I will be. But that's the only way I can get fully invested on the long-term side on the way down is hit those SPY numbers or get that Fed pivot. Now, if you actually need price action to confirm a low, what do I keep telling you guys I need? I need that VIX over 40. We are nowhere near there. And do you want to see where the VIX comes in at the best lows? Not only do I need a VIX over 40, but if you want a great low, you're going to need to see a VIX around 80, 2008, 2020. So forget 40, double that to 80, and then we're talking about a real low. And I want you guys to notice something that I only noticed this weekend. Where's my monthly chart of VIX? I have, for the first time in my VIX chart ever, except for right here, which was bullish because we were moving up. So that's the difference. I want you guys to notice this part. When the volatility was increasing, our market was trending higher. Now we have volatility increasing and our market's trending lower. And for the first time since that spike in 2008, I want you to notice something on this monthly chart. And if you can't see it here, I understand, but I can. The 21 EMA is above the 50 SMA, which is above the 100 and 150 SMA, which I can't even see. Which one's the 200 SMA? Is that it right there? So I think that's the 200 SMA. Where am I at, guys? The yellow line. Yep, 200 SMA. So what I wanted to show you guys is the 21 EMA is above the 50 SMA, is above the 200 SMA, and the 50 SMA is also above the 100 150 SMA. That's the first time the VIX has been bullish stacked like that since before 2008. So we'll see if that's, hinting that we're going to have a 2008 type market. Like I said, I still think this might be turning secular out of a cyclical bear based on price analysis only. However, I operate on the short side on the end of day side. But whenever I operate on the short side on the end of day side, the SPY is below the 200 weekly SMA, has failed it, and then has failed that low. So from 2001 to 2003, guess what I was doing on the end of day side? Shorting. 2008 into the 2009 lows, guess what I was doing? Shorting. Do you know what I haven't been doing from 2009 to this top? Shorting. Do you know what I haven't been doing yet on an end-of-day basis? Shorting. But now the SPY is flirting with that 200 weekly SMA. It gets below it, rallies back to the 200 SMA, fails it below this low, let's say. We can start shorting. We can start looking at those shorts. Because if you also look at this monthly, you'll see that this monthly TTM histogram momentum rarely ever goes bearish. 2001, 2008, 2022. If you're also looking for a short-term bottom via that VIX level, I would also consider that equity put call ratio. I keep telling you guys, I want to see it over 1 and sustain itself over 1. Or for a potential bottom with the VIX over 40, I need to see it hit 1.2. Guys, that equity put call hit 1.02 in September. Excuse me. Sorry, didn't know that I had that chart up there. The SPY has hit new lows on Thursday, has rallied back on Friday, major reversal down on Friday. Do you know what that equity put call ratio peaked at in October? 0.88. Do you know where it's at after Friday? It's at new October lows, 0.63. So not only were they buying calls on this day, but on this pullback, retail thought it was a smart idea to buy calls all day long. We'll see how that works out. So that's all I have on that note. I want to really, when I make these video lessons, I want to focus on long terms because like I said, there is so much content. I had no idea there was so much content on YouTube and out there. There must be at least 10,000 stock market YouTube video channels, at least minimum. So I thank everybody that's watching these video lessons, and I realize the vast majority watching this are probably for that long-term view because I do operate on that level. But I'll be honest, guys, the vast majority of my capital right now is in my intraday portfolios. I'm all about day trading, and I focus on small caps, like I said. However, the next biggest portion of my capital is in the quarterly portfolios. They went 100% cash in February. They remain 100% cash now. And I told you guys in the last video lesson, I'm not deviating from the November and the November plan on November 19th. I planned on buying all the leaders and being 100% invested. However, this week, multiple leaders have broken, the kind of leaders that I like. The data that we got, the CPI data on Thursday and Wednesday's PPI data, once again, guys, professionals, as new data comes in, change accordingly. If the CPI data came in better than expected, if the PPI data came in better than expected, if my wife wouldn't have gone out on Wednesday grocery shopping and came back and told me, holy crap, everything is more expensive, I would think, hey, still doing it. But after the information I got, the Fed dot plot, if you go to the FOMC watch, I can't even remember. Let me look it up on my other monitors. FOMC, CME forecast. This is where I always go to. Countdown to FOMC, CMEgroup.com, CME Fed Watch Tool. Not only is the 75 basis point rate hike caked in for November, the odds shot up for December for a 75 point basis rate hike following Thursday's information. And we're now over 5% target rate for the end of 2023. So everything has moved higher. Things don't look good. I'm going to need to see some kind of bottom, a real short-term actionable bottom before I go ahead and do that quarterly portfolio. So I'm still considering it, but I now need to see the market confirm following the information we got this past week. So bringing it back into quarterly portfolios. After the quarterly portfolios, my next biggest amount of capital currently is placed towards canceling position and canceling swing trades. The canceling positions portfolio is 100% cash. The canceling swing trade portfolio has one position, DVN. DVN, I put a good to cancel buy stop limit order above this high. Did not trigger and fill on the upside on Thursday. I let it trigger and fill on the way back down on Friday. Horrible price action on Friday. Very, very reduced size. I will be cutting my loss on DVN with a close below this low a day, which should coincide and line up with the 50 SMA. A close below the 50 SMA and this low, and I'm out of DVN, and I'm right back to 100% cash in the cancel and swing portfolio. 100% cash quarterly, 100% cash cancel and position, cancel and swing with DVN. Well under 5% long position. I would say it's probably a 97% cash position. And on the end of day swing side, we're 99% cash. We've got a couple of winners on that side, and this just goes to show you stick with the leaders. AVEO was a new long position here. You can see, as of Friday's close, 13% gain. AVEO is a biotech stock. The other position that we're long that's still rocking, AVTE, was a new long here. As of Friday's close, up 20%. AVTE is a biotech stock. Biotech. It's the one and only industry group that consistently every day shows up in my long scans. And on that note, the leaders still are VRTX, NBIX, AMGN, GILD, BIIB. These are your leaders. Now, I also like some shipping stocks. They're holding up relatively well. I'm not going to do anything, but I just want to bring it to your attention. Also, TNK, TNP, TRMD, and you got to be bullish on this sector because I know we've been ordering a lot of things lately, and none of them have arrived to my doorstep yet. So keep that in mind. Also, safety side, consumer staples, Tootsie Roll, Campbell's Soup, TW&K Twinkies, Calm. Really like Pepsi after its earnings results beating on Wednesday, but that reversal on Friday just tells you it's a dangerous market. So the main position, the amalgamation of everything, cash. Cash is king, baby. Cash. So I just want to end this video lesson talking about the trade idea that I had last week for you guys. There are no new trade ideas this week. I got nothing. I showed you the stocks I liked in the consumer staple side, the shipping side, the biotech side. Showed you two winners we have, AVEO, AVTE, both biotechs. They are the exceptions. They are not the rule. What happened to DEN following my idea last weekend? This happened. Not what I wanted to see. So much for my pullback to the 21 EMA. However, now I have it. Is my game plan still the same for DEN following this pullback to the 21 EMA? I would say no. I'm going to look at my other, oh God, yeah. So I've even lost green balance of power, which is a technical indicator I use on Telechart version 7. It's not important. Price is all that really matters, but it's a confirmation tool. Also, TSV on the daily has gone negative, and the TTM trend momentum has rolled over. Also, when a stock breaks out, there's a rule in the IBD Can Slim crowd that when you get 3 days in a row on higher volume, your breakout is probably going to fail, or you should cut your losses. So if you bought that DVN breakout right at that good to cancel buy stop limit point right above the pivot point high of the base, you got to be out after a Friday session. So if I would be long, what would I be doing? Selling? Then why would I be buying? Even if I get a hammer candle similar to this Like, so I'm going to use the 21 EMA line. Even if I get a hammer candle like this or like this, following that volume sell-off, I don't think I'm interested. So the den idea is canceled, voided, no new trade ideas going into this new week. So that's where we stand. I'm at the 20-minute mark. I'm going to wrap it up. Guys, if you want to be a member of the team, it's in the description below. Very, very nominal cost. I can't get any less expensive. I'm literally running a deal 24/7, 365. Go check to see how much other quality services cost. The only difference is that I don't try to sell you a bullshit course that in no way will be relevant 5 years from now. Well, it might be. CanSlim is timeless, guys. That's always going to work. But the nuances of it change. And methodologies change. I'm trading differently today than I traded 3 years ago. I'm trading differently today than I traded 6 years ago, which was different than the way I traded 3 years ago. It's a constant evolution. So that's why I can keep costs so low. So if you enjoyed or learned anything from this video lesson, also helping promote the channel would be greatly appreciated. Anyway, guys, thank you so much for watching the video lesson. I love you all. There's a lot of content out there, and I really appreciate it when you watch my video lessons. Love you guys. Good luck in the upcoming week. Stay safe. Cash is king.